Hello guys, Joseph here. Thank you so much for joining me. Basically what I'm going to do in this video is show you guys a glimpse of some of the trading techniques and strategies that you can expect to see in most of my videos. Now if you come here expecting to learn something, I really hope that by the end of this video you've actually achieved that, and hopefully you're going to be impressed enough to leave a positive comment, or not. But obviously my main aim is to try and get a good message across to some traders out there. So the trading strategy I'm going to be talking about today is one that involves the use of Fibonacci ratio and structure to predict price movement in the forex market. So the first thing I'm going to do is I'm going to show you guys a visual representation of what this strategy look like, and then I'm going to place a live trade using the same strategy so you guys can see the results for yourself. So the first thing I'm going to do, I'm going to try and find a big space so I can give an illustration of what the strategy look like. So the first and most important thing in trading this strategy is the identification of a bullish move, and this is what a bullish move look like. A bullish move, we get an initial move, and then we get a pullback, or what I call a retracement, and then we get another move forming a new structure high. And basically this is what a bullish move look like. So to trade this strategy, after identifying a bullish move, you need to identify your entry point, and to get the entry point you use the Fibonacci retracement. Actually, before I do that, let me go ahead and label these charts because I find it easier to explain, to get my message across when I put my labels on. So we're gonna go label that as X, and we're gonna label that as A, and we're gonna label that as B, and we're going to label that as C. So basically, now we've labeled this diagram. So the second thing, it's identifying the entry point. And to get the entry point, like I said, you use the Fibonacci retracement to get the Fibonacci ratio to get a retracement of the B to C leg. And the retracement we're going to be looking for is the 618 retracement. Why? Because the 618 retracement is historically one of the strongest Fibonacci levels, and usually in this strategy the 618 retracement usually comes in comes in at the previous structure, or basically around the previous structure, near the previous structure, which is A. So if we get a retracement from B to C leg, we're looking for the 618 retracement, and we got a 618 retracement right there, which is very close to the previous structure A, and that's going to be our entry point. And the first target, our target, is going to be basically at C, and then our stop loss is going to go below B. So let me draw this to show you guys. And one important thing as well, the reason why we use 618 retracement for this strategy is the fact that 618 retracement gives us a risk to reward ratio of at least 1:1. And guys, that is very important for you guys that trade. You know, having a risk to reward ratio of at least 1:1 on every single trade, it's very important. So as you can see, we have a risk to reward ratio of at least 1:1. We've got our entry point, our stop loss is below B, and our target is at C. So what I'm going to do right now is I'm going to go straight to the chart and try and find a bullish move, and then place a live trade using this strategy so you guys can see how it works out. So I'm on the Australian dollar against the US dollar chart, so I'm going to go ahead and drop this down to the 5-minute chart. So there is a bullish move actually on this chart. Okay, so here we are. I'm going to go ahead and draw this up again. So we got an initial move, we got a pullback, and we got another move forming a new structure high. So this is our bullish move, guys. The next thing to do is obviously use our Fibonacci retracement to get a retracement of the B to C leg. So we're going to bring in our Fibonacci retracement, B to C, and the retracement we're looking at is the 618 retracement. And guys, as you can see, the 618 retracement comes in right at the previous structure. that's going to give us our entry point. So I'm going to go ahead and place a buy limit order at the 6-minute retracement comes in at 71.36, but I'm going to put a limit order at 71.37 just so I get filled, because obviously I'm accounting for spreads. So $71.37. Our stop loss is going to go below B. So B is at 71.26. So we're going to put our stop loss at around 71.22. Okay, stop loss 71.22. Actually, we're going to use 50,000 lots, and then which is usually it's just 5 million lots. So we're going to put our profit target is going to be at previous structure, and the previous structure is at 71.50. So we're going to go on, place our profit right there, and guys, this is it. So what I'm going to do right now is I'm going to go ahead and pause this video, and I'll come back once we get filled on the orders. Hello guys. Now the market has actually come back down, and we actually just a pip away from our entry. So so like I said, it would, obviously I was expecting this market to come back down into the 6-minute retracement, which falls within this structure. So what we're going to see right now, as soon as our target has been, as soon as our entry limit has been filled, we're going to expect this market to come back up to the previous structure, which is going to hit our target, obviously, giving us a profit limit of around about £70, which is not going to be too bad for a day's work. So as we sit and watch this, hopefully we're going to get filled as quickly as possible. So let me just pause this video again, and once we get filled, I'll come back to it. Okay guys, so our order has finally been filled. So we're actually in the trade right now. So what we're going to expect to see, obviously what I expect to see, is for this market to retrace back up into previous structure. So I'm expecting to see a move back into previous structure, hitting our profit target. But obviously I'm expecting that move to happen somewhere in this zone. Oops. So somewhere in this zone, I'm expecting a retracement from this market back up into previous structure. So I'm going to go ahead and pause this video, and I'll come back once our profit target has been hit. Hello guys. So basically our target has just been hit. Well, I wasn't actually expecting that. It's been hit in less than 5 minutes after we got into the trade. So giving us a profit of around about £70 in less than an hour. So basically this is how the strategy works, guys. Obviously the most important thing, like I said, about any strategy is the rules. You need to have like clear, defined and specific rules to follow. And with this strategy, we've already had our rules, like you need to know where your stop loss are gonna go, where your profits are gonna go, and where also the entry point. And there's also one thing I want to say about this strategy is, if you're trading this strategy on a bullish market, you can actually aim for 2 targets, which is going to give you a risk to reward ratio of more than 2 to 1. Okay, so let me go back up to our previous drawing, and I'll show you how you guys can actually do that. This is just an extra lesson on trading the same strategy. So if you're trading this strategy on a bullish market, obviously you would be expecting the market after coming back down into the previous structure, the 6-minute retracement, and for the market to continue its bullish momentum. So if you're trading this strategy on a bullish market, you're going to be aiming for 2 targets. Obviously the first target is going to be, oops, I shouldn't have taken that one out. Let me try and get back rectangle. Yeah, so obviously the first target is going to be at C, which is the structure. So the second target, if you're trading this on a bullish market, you're going to have to use a Fibonacci extension in order to get your second target. And the Fibonacci extension, you're going to use as 1618 extension of the B to C leg. So we're going to go swing high to swing low and back down again. And you're looking at the 1618 extension. So you could be actually aiming for two targets. Target 1 at C, which is the previous structure, and then a target 2 at 1618 extension of the B to C leg, which is going to give you a risk to reward ratio of more than 2 to 1. So thank you guys for watching. I really hope that you've liked it, and if you've liked what I've just done today, I hope you can just leave a positive comment, or you can criticize, whatever you want to do. Thank you so much.